In today's video, we're going to be discussing how us at Prosperity Algo Solutions and our clients have been trading the gold rally without trying to guess tops and in a systematic way. So now that gold has been absolutely ripping until last Thursday, there's been all this euphoria around should we be entering the market, should we be selling, should we be trying to call tops, should we be trying to call bottoms, and all of that is extremely challenging to do. So us at Prosperity Algo have been actually in this rally for over a month by now, and we've been using it with really good results in a systematic way. And the main thing comes down to, instead of us trying to call a top or trying to call a bottom, using a set of rules to algorithmically capture this rally while also protecting our downside risk. So as you guys can see in this EA on a live Vantage account, is we are pretty much buying at the open and holding until the close. And that's literally what this bot is doing. It's just buying at the open, holding to the close, buying to the open, holding to the close. However, when it has a losing day, for instance, the past couple days here, it does have a stop loss. So we're buying at the open, holding to the close, but we also have a stop loss which corresponds to a percentage of the prior day's range. And why this is great is if everything works properly, when you stop out, you only lose 1 R, but in the event that you have a nice big running day, you might be able to make 4R, 5R, 6R, and really capture the downside, capture the upside. So as long as you kind of enter at a position with a stop loss, you can use a bit of leverage and you can really capture a huge chunk of that daily range. So this is really a very good way to kind of not cap your winners, but cap your losers through using a stop loss as well as a bit of leverage. So this is kind of the technical way as to how we've been trading the rally. But the biggest question is like, how do you know when to get in and how do you know when to get out? So it's not just, for instance, me guessing that, hey, I think gold is going to go up or I think gold is going to go down, because fundamentally speaking, like after some of these days here, like a lot of people had a natural intuition where it's like, I don't think gold's going to keep going, but it did, right? So had we gotten to like this point here and all of a sudden we said, nah, I don't think it's already overextended, let's stop buying, we would have missed out on this huge rally. Or let's say, for instance, what a lot of people did is retail really started catching on up around here. So had we just kind of jumped in at this point as opposed to way down here, we would have only taken some losers. So really the main kind of thing to do here is always kind of enter a rally in such a way where you don't cap your upside, but you cap your downside, and also be very systematic about why you decide to enter. So this spreadsheet shows exactly when we would have decided to enter gold. So here we're trading with our golden longbow EA, which is based on commitment of traders reports. And specifically what it's doing is we're only entering once large speculators are net long over a certain percent. So we can see over the past year, for instance, like at the beginning of 2025, when gold was like absolutely rallying super hard, and as you guys can see right here, all of these large speculators were extremely long, right? So this would have been until roughly March of 2025 of last year. And then all throughout kind of the summer of last year, we can see that they were pretty bearish, or not bearish, but they were less euphoric than normal. So if we kind of go here and we look at the summer of last year, this is when we were moving sideways, right? So they were super bullish during this period. When we kind of entered this sideways phase, they were a bit less bullish. And now, boom, we see here roughly in September, that's when they started getting super euphoric once again. And lo and behold, if we look kind of here in September, we would have been re-entering the market once again because they were both super bullish once more. October, they kind of got a little bit boring again, and this would have been October and getting a little bit into November. So that would have been October kind of getting into November when you have this more choppy, not so good price action. And then this would have been around the beginning of the new year. And lo and behold, we would have started entering, granted the government was shut down during this time, so less euphoric. But since kind of December of last year, we've seen very bullish positioning all of a sudden amongst these large speculators. And then here, December of last year, really bullish. So this is how you do this in a systematic way. This week we're actually still going to be in because yes, they did sell heavily. Pardon me, let me just go and show you guys here. They did sell heavily as of this week. However, they have not yet breached the threshold of what is bearish enough. But either we have a rally, and then most likely we're going to see the positioning go up higher, or alternatively, if it keeps going down, most likely we're going to have 1 week which is not so good and then get out of the market. So that really shows the power of using like a very systematic way to actually catch rallies. Because realistically, calling tops and bottoms is so hard. So if you combined a very smart technical setup where you don't cap your winners, but you cap your losers with a systematic way of entering, that's really how we've been trading the gold market. I think we made a little bit over 20%, I guess with Thursday and Friday's losses, high teens, low 20s, just in January using this strategy, risking 1% per day. So it's been very effective. So we might take a bit of a haircut on that this week, depending on if we stay a bit too late in the market. But even if that's the case, we still would have done exceptionally well. So being able to take this approach to catch rallies is really how we've been trading the gold market throughout this rally in a very systematic way, and has proven to have been getting us very good results. Many of our clients have passed prop firm challenges in 2-3 days using this, and overall it's been a fairly interesting way of capitalizing on this trend. So guys, hope you found that interesting and perhaps useful, and let me know if you have any questions in the comments. Cheers.